We have a lot to cover today, but before we do, JP Morgan has teams to support you at every stage of your growth. As former founders who have worked in local markets themselves, the bankers at JP Morgan bring deep sector knowledge and lived experience to their clients. JP Morgan can help you navigate complexity with confidence, backed by real-world insights and an entrepreneurial perspective. Get what your startup needs now at jpmorgan.com/grow without limits. JP Morgan is the bank of the innovation economy. And welcome to the Tearsheet Podcast, where we explore financial services together with an eye on technology, innovation, emerging models, and changing expectations. I'm your host, Zach Miller, Editor-in-Chief at Tearsheet. In today's episode, we're diving deep into the future of stablecoins in the wake of the recently passed Genius Act. Our guest is Kirill Gertman, CEO of stablecoin-powered global payment platform Conduit, who brings a unique perspective, having navigated very different regulatory environments for this emerging technology. And while the Genius Act may seem like a stamp of approval for stablecoins, Kirill recommends against taking this regulatory milestone for granted. I hope he'll share why he thinks the longevity of this legislation could be tested as the U.S. political pendulum swings ever wider, and how mainstream adoption by both consumers and major financial institutions may be the best defense against future rollbacks. I hope we'll dive into why the Genius Act's real implications for stablecoin issuers and crypto, what those will be, why every fintech and bank now needs a stablecoin strategy, and predictions for stablecoin evolution over the next 3 years. Kirill will also share the story behind Conduit's 16x growth in 2024 and the recent Series A, offering a window into a stablecoin industry's transformation from the inside. So whether you're bullish, bearish, or just stablecoin curious, this episode offers a nuanced take on one of the most dynamic corners of financial services. So let's dig in. Welcome to the show, Kirill.
Thank you. Thanks for having me, Zach.
So, give a short intro who you are and what Conduit is, and maybe we use that to set up the context for how we can have this conversation around stablecoins.
Yeah, of course. And so, as you mentioned, my name is Kirill Gertman. I'm CEO and founder of Conduit. I spent almost the last 2 decades in financial services. I think about 18 or 19 years at this point. And I worked the gamut, right? So I've been in banking, I've been in a number of fintechs, and I spent, I think, 6 or 7 years in crypto. Before starting Conduit, actually focusing more on consumer applications. I was VP of product at BRD, which is was a mobile wallet that we ended up selling to Coinbase, and that became Coinbase Wallet. And then became a founder. So I founded my first company a little while ago, sold it, and then founded Conduit in 2021. So about 4.5 years ago. And so Conduit came about because having spent all this time in financial services and banking and crypto, I realized that, or at least I felt at the time, that there is an opportunity to build maybe more meaningful, more practical products using blockchain, essentially using crypto. And I felt that, again, at least at the time, that a lot of the projects, a lot of the companies that were working in this space were sort of turning towards the lower hanging fruit. Like building things that are speculative in nature, launching tokens, things like that. And I think there's a temptation to do that. But I felt like if you think about things with maybe a longer time horizon, there's an opportunity to figure out things that are more practical in the day to day for individuals, for businesses. Took us a little while to figure out what that meant, what that actually is. So we spent the first couple of years essentially looking for product market fit. We found it about 2 years ago, and that is cross-border payments. So stablecoin powered cross-border payments. We enable businesses in emerging markets, nowadays in developing markets as well, transact across borders faster, cheaper, more reliably than traditional methods such as SWIFT. So that's short about that.
Thanks, and I'm happy to talk to you today. And so, I guess hot on the agenda is the Genius Act. Provide some regulatory clarity for stablecoins. So, what are the most significant implications for issuers like Conduit and the broader crypto ecosystem?
Yeah, I think so. A few things, I guess, here that I'd like to highlight. I think one is maybe starting from why does this even matter, right? Like
Yeah.
why does the Genius Act even matter? And I think the core of that is the fact that there are kind of, based on my previous point, there are actual practical use cases for stablecoin that make people's lives, better in some way, right? Or business lives better. So usually, again, it comes down to faster and cheaper payments, right? So whether you're sending maybe money to your grandma in Mexico, or maybe you're a business that's sending payments to your vendors from Brazil to China, whatever it may be. There are like real advantages, right? So this is why I think it's actually important to stress that the Genius Act generally is a positive thing, right? Because it puts regulatory framework on top of things that again enable better experiences for people, right? So that's maybe a good starting point. Um, Going from there, I should know we're not an issuer ourselves, right? So we don't issue a stablecoin, at least currently. We do work with issuers such as Circle, Tether, PayPal, many others. Um, I think what the state, there's a number of things that, and I'll try to kind of list the different perspectives. Maybe you guide me towards which one we want to dig deeper. But like, I think the number one thing that's actually important here is the fact that finally there is a regulation in the US that governs this thing, right? So finally there's actually something that says what you can and cannot do, and it's official and legitimate.
And it was hard to invest in front of it until there was some regulatory clarity.
Yeah,
Yes.
exactly. So this is like just the fact by its mere existence, right? I think it's already important because it kind of tells us what's possible, what's not.
Mhm.
I think it creates interesting incentives, right, in the US, but actually maybe even more broadly, what I've seen in the market, like we work again in Brazil, in Mexico, in many other countries around the world, and I've seen sort of a wave of regulatory, maybe not quite clarity everywhere yet, but at least attempts of making this, sort of copying the US in some sense, right? Now that there's there. So I think that's also important. Within the US, um, it's interesting because it kind of sets the groundwork for, again, issuers, banks, private companies, how they can issue, what they can do with the reserves, what the reserves need to be. And so that's really important as well. I think maybe to sum up a bit of a long story, I think what it will lead to is a sort of Cambrian explosion almost of stablecoins, deposit tokens, and I can talk about the differences between those things. Both corporate and more issuers and banks themselves getting into this game. None of this was possible before, right? So that's why I think it's quite important that we have this now.
My next question was actually about forming a strategy, how you would recommend, a financial institution to formulate a strategy. But you mentioned the difference between stablecoins and deposit tokens. Maybe we'll start there before we jump into strategy.
Yeah, yeah, and I think these two things are actually interrelated, right? And so there's obvious similarities between the stablecoin and the deposit token. Both are digital tokens on chain. Um, the difference is primarily their reserves. So what is backing that token? And so in case of stablecoin, most of the time what you're going to have, as we circle with Tether, is essentially a mix of cash, but primarily short-term treasuries, right?
Mhm.
And the business model for most issuers today, especially US dollar denominated stablecoins, is essentially to make money on the yield, right? So if you have 100 million or 100 billion, actually, right?
Mhm. The
Stay
numbers are
used.
getting much bigger. Yeah.
They are, right?
Yeah.
And so, if you're getting, again, 100 billion USDC or USDT out in the world, what's actually backing it is essentially, bonds, short-term treasuries and whatnot. And so you're making, at this point, 3-4 kind of percent a year. But, the 100 billion, that's a decent number, right? And especially, this is how Tether makes a profit of, I think, 4 billion a quarter or something like that. So that's kind of the stablecoin world. The deposit token world is a little bit different. What's backing a deposit token are the actual deposits, right? So you need to be a depository institution, essentially a bank, to be able to take deposits. And you're not converting the reserves into treasuries, into anything else, right? You have cash sitting there, and it's one-to-one to a deposit that's sitting in your banking account, essentially. The difference is, if you're a bank it actually makes a lot more sense for you to issue a deposit token
Hmm.
because you're the only institution that can fractionalize the reserve, right? So Circle, Tether, etc., no other issuer can fractionalize the reserves, right? And actually within Genius, right, you will see that if you issue a stablecoin, it has to be backed one to one with a with an equivalent sitting somewhere, right? So with a deposit token, you can actually treat it just like you do with all the other deposits, meaning you can lend, if you have $10, right, of a deposit token and you have $10 in cash, you can lend out $9 and make money on that. And it's still valid, right? Because you're a bank
Hmm.
and you can do that. The challenge you then run into is that, well, if you're a bank ABC, you have a deposit token, what do you do with that next, right? It's like, well, now what, right? It's like, this is the question, like, okay, then, what do you do
Yeah.
with that? That's maybe the next question you have about strategy.
Yeah. So if you're a leading FI, or maybe a bit smaller institution nipping at their heels, like, how do you find your place in this sector? Like, how do you determine like where you can provide the most value to your ecosystem or to your customers? Like, how do you begin to formulate a strategy? Because just doing it to do it doesn't seem to make sense.
Yes, and yet a lot of people are doing it, I think, for exactly that reason.
That's
You're
how a lot of
doing it.
people start. Yeah.
Yeah, like you're just doing it because everyone else is doing it. Like, like they say about kids, if all your friends jump off a bridge, right? They're gonna, well,
And in
apparently, yeah.
banking, we do that. Yes, exactly.
We do that.
We jump off a
We
lot of bridges. Yeah.
we actually do that. So I think there's that, right? And I think and in some sense, maybe there's a little bit of value in like issuing PR and kind of making
Hmm.
yourself a little bit more relevant and
Sure.
getting attention and whatnot. And I've seen, maybe whether that's financial institutions or some of the core builders, I mean, like things like that, kind of say things about stablecoin that if you dig a little bit deeper, are, just quite superficial, right? And so and what's interesting is that we work with a number today. We work with a number of banks. I've talked to all the way from the absolute top tier one banks here in the US to the smallest community banks, right? And so we work with a number of them. And I think what is a good starting point is to understand what you want to achieve with that. Meaning, I think there's a couple of avenues, right? Like, again, going back to like why even started this company, what's the practical angle here? Like, what can we actually do with this thing, right? And I think domestically within the US, today at least, there are not a lot of use cases in stablecoins or deposit tokens. And the primary reason for that is because we already have dollars here, right? So in most of the world outside of the US, at least the initial adoption wave, right? It's actually not quite the case anymore, but the initial sort of adoption wave was driven by the fact that people were looking for dollars or dollar equivalents.
Right.
And so, if you're in Colombia, if you're in Brazil, if you're in Nigeria, if you're in Kenya, I mean,
As a hedge to inflation or a weak
yeah.
currency, whatever.
Exactly. Again, it evolved beyond that. Now we actually, that's still the case, but now we have use cases on top of that, if you will, right? So now, the building things again within payments and such, right? In the US, however, that was never the case, and it's still not the case. We have dollars in the US. I think what's going to happen is that both stable coins and deposit tokens domestically are going to be very much in the background and not at the forefront. Meaning that I'm here in Boston. I'm probably not going to have a stablecoin wallet for the sake of buying my Starbucks, right, or something like that. It's just not. I don't see it happening. What I
Hmm.
think will happen in the US is Starbucks themselves may issue a stablecoin because it makes economic sense for them, right? Now they're going to be making, again, Starbucks is one of the largest fintechs out there with, I think, whatever,
3, 4 billion.
$2, 3, 4 billion in the,
Yeah.
yeah,
Top 100 bank, I think, if you were
exactly, right?
at the
So,
deposit level. Yeah.
right? And so it makes sense for them, but they're not an actual bank. So it makes sense for
Exactly.
them to actually maybe issue a stable coin, again, make money on the reserves, save money on the interchange, but it's going to be abstracted from the user in some sense, right? I'm not
Hmm.
literally probably going to be, having a wallet with Starbucks coins. And similarly in use cases such as Robinhood's tokenized stocks, prediction markets, many things like that that essentially can be powered by stable coins. But I think those things are not necessarily going to have a stablecoin wallet on top of them. So if
Right.
you're looking at US domestic cases, I think you should be really thinking about, again, more retail and like how can we power our retail offering to be better, faster, cheaper, connected to Starbucks, connected to Robinhood, things like that, and kind of in the long term, right? There's another use case, which is what we're powering, which is the cross-border use case, right? And so in that case, you need to look at your customer base and say to yourself, okay, do we have, companies, again, individuals that are sending remittances abroad? Maybe we have corporates that are paying suppliers in Mexico. Maybe they're paying employees in Argentina. Maybe they're receiving goods. They look at something like Airbnb or something like that has a huge international footprint, and they need to repatriate these funds back into the US. And so if you have, these type of use cases within your customer base, then yeah, absolutely, you should be thinking about stablecoins. You should be thinking about incorporating stablecoins for treasury movement for your customers or for yourself, speeding up these transactions across border, uh, saving on the cost or making higher margin, right? Because if you're saving the cost, you can either, pass it on to your customers or keep it the same and, grow your margins. So there's a number of things you should be thinking about. I probably talked for too long, so.
No, you didn't. Kirill, so I guess given what you've laid out, the different options, who in the wake of the Genius Act, who do you think some of the winners are, and who's playing catch up?
Yeah, I think definitely the banks are playing catch up, right? So like I think the winners are Circle, the winners are so there's a few winners here actually. So Circle, Coinbase, anybody that's ourselves included, right? Whoever is in this ecosystem today now has a much more clear sort of field in which to operate, the rules under which to operate, and we're definitely benefiting from this. Banks, on the other hand, and this is what I hear a lot, are quite worried about this, right? And you've probably seen, banks kind of lobbying against the ability for issuers to give yield to customers, even if they're not able to do it directly. They do have a way to essentially do it through like a separate entity, an agent, marketing agency, call it rewards, whatever else. But the reality is they can actually pass the yield or all of the yield that they're making in treasuries back to the customer, right? And so I think banks are trying to play catch up. My answer to that is that in reality, we all know that banks have the ability to do the same thing. Like there's nothing stopping any bank from being able to offer a very similar level of yield to its customers. Just don't want to. Right? So like this has not been the case historically, and so obviously there's an effort to kind of lobby against that. But I think in some sense, if they want to catch up, they should bring the overall kind of level of their offer, right? And that includes maybe passing yield to the customer. And then the end of the day, that is going to be a beneficial thing for the customers, right? For the individuals, for the businesses overall, right? So I actually don't think it's all that bad to try and kind of push banks to deliver a better experience to compete with the likes of Coinbase.
I hear that. And what remains to be built out? I guess in the ecosystem, the different players there. Are there still kind of like greenfield opportunities that haven't been addressed yet?
Yeah, I think so. I think so. And of course, and we see this, right? So today, the players that are maybe a little bit ahead of the pack in some sense, what they're trying to do is they're trying to verticalize. And you see this with Stripe, you see this with Circle, right? So Stripe is launching Tempo, which is its own blockchain. What I mean by verticalize is that you build the entire stack, right? It's not just that you have a stable coin, you have a distribution channel or multiple channels, you have that stable coin, you have, in case of Stripe, you have some sort of wallet infrastructure that they got with
It's
Privy.
Ford Motor Company owning steel mills, right? Like,
Right,
yeah.
exactly. That's exactly right. And so, like, and all the way at the bottom, you have an L1, right, which is your own blockchain, right? And so in case of Stripe, it's Tempo. In case of Circle, it's called Arc. There are many. Again, I know of like tier one banks that are building exactly the same stack already. In fact, they have built it. They haven't launched it publicly yet, so I won't name them. But there are several. And in fact, actually, by the way, there are also a couple that have publicly talked about, right? JPMC and City Deposit Token and so on, right? So these things exist. And, from that point of view, again, if you're Stripe or if you're City, it makes all the sense in the world to like build your own vertical stack, right? My concept, however, is that we're going to end up with a lot of silos this way. And of course, everyone will say that, my stack is fully interoperable, right? We accept all comers, and that I think that will be true, at least initially. But I think the incentives are so strong, right, to like prioritize your own token in some sense, right? And prioritize your own stack over others. Sooner or later, right? You either gonna incentivize your own token, or disincentivize other tokens, and you want to build a walled garden, right? Because that's how you capture the most economics.
Apple.
And I think, again, that's already happening today, and this will happen more and more, and we'll see PayPal stablecoin. I think Cloudflare announced the stablecoin. I would not be
Really?
surprised if Amazon does it, or and so forth, right? But then, going back and kind of looking at this landscape from a consumer perspective or a merchant perspective, you're like, how do we deal with all that? Right now, it creates a ton of complexity for you. And again, if you're a merchant and maybe you are getting paid in a PayPal stablecoin, and then you have your like Shopify store, and you need to keep your balance in a Stripe stablecoin, and then
Oh,
you
what
need
a
to pay a
pain. Yeah.
supplier, right? Like you need to pay a supplier in China, and that's going to be the digital UI, right? Like it's a mess, right? Like it's going to become quite difficult. And so where I see an opportunity, particularly for us, right? We're not, we want to stay in some sense agnostic, right? So we don't want to build our own stack. Instead, I want to be able to connect horizontally all the different players in this ecosystem, be like the Switzerland of stablecoins in some sense, right? And be the interchange. Or maybe a better word, especially for this audience, is going to be the clearinghouse, right? The next generation clearinghouse on-chain settlement layer across all of these different things, so that when I go to Starbucks, I don't need to figure out a way how do I convert my PayPal stable into a Starbucks stable and get my coffee. No, I just want to like get my coffee, right? So
Make it work. Yeah.
yeah, exactly.
Kirill, before we close out today, I'm curious. I mentioned in the intro that you guys, it sounds like, had a banner year last year, a lot of growth.
Yeah.
Can you talk to us about where that growth's coming from, how the company has evolved, how that's impacting your roadmap, where you're headed in the future, that kind of stuff?
Yeah, for sure. I think so. Last year, and then maybe I'll talk even about this year, because we're almost done with this year too at this
Yeah,
point.
it went like that. Yeah.
Yeah. So this year was also a pretty good year. So I think last year, what essentially happened to us is that we really focused on emerging markets. So we started in Latin America, we expanded into Africa, and then into Asia. And what we found in those markets is the fact that a lot of businesses had already accumulated balances of stablecoin. Right. And so, and then the reason they would do that, I think we said this earlier, is essentially to hedge against their local inflation, right? To hedge against their local fiat volatility. So they would build up a balance of USDC or USDT or what have you, right? The challenge that they then started running into is the fact that they couldn't use that balance in their actual business operations in a seamless way, right? So again, if I'm a business in Brazil and I want to hedge against BRL volatility, yes, I have a million USDC or whatever sitting in my wallet,
What
but
do you
then
do
I
with
need
that at that point?
exactly what do you do
Yeah.
with that then, right? So
What
like,
do they do with that at the point?
well, so that's what we're solving for, right? So like essentially you need to pay your supplier in China, right? If you're in Brazil importing goods from China, electronics, right? For example, you need to be able to pay that supplier. And that's is where we came in and we
Right. No, I
helped
understand.
you.
I guess I was kind of curious, like, what do they do before Conduit came on the
Yeah.
scene?
It's actually it's pretty simple, but it's quite frustrating, right? So what they would do is actually they would offer them back into BRL, right? So you have
Mm-hmm.
essentially, let me kind of walk you through this in 30 seconds, right? So
Please.
again, you're an importer in Brazil, right? You're bringing in, again, just for the sake of this example, TVs. You have a shipment coming, you need to pay net 60, net 90. It's $10 million, let's say, right? It's a large
Mm-hmm.
amount. These are like one-off, but large amounts, right?
Mm-hmm.
So, and you're sitting there and thinking, I have the amount of BRL to cover this $10 million invoice today, but in 3 months, that amount of BRL is probably going to need to be a little bit bigger, right? So I
Mm-hmm.
want to lock it in a sense, right? And so what I'm going to do is I'm going to buy, again, USDC, USDT, and just sit on that balance for 3 months. And then what used to happen before essentially Conduit showed up in the market is you go back, meaning that you sell your USDC, you get your BRL in your bank account, you then, go to your bank, and say, hey, I want to pay my supplier in China. You send a SWIFT that takes T plus from Brazil to China. That's like a middle case. It's not the best. It's not the worst case scenario, right? It's about T plus 4, let's say. You get hit by a bunch of fixed fees. You kind of have an FX rate you don't control. So like it's quite expensive and it's frustrating, right? And we showed up and we said, don't worry about that. You don't need to do that, right? You don't need to kind of off ramp. You don't need to do any of that. We'll take care of this. We're going to execute that payment locally using local payment method on the other side, HKD, CNY, whatever this may be, without you having to send a SWIFT, without you off ramping. And it's going to happen in minutes. It's going to be cheaper. There's not a fixed, $35 or whatever fixed fee for the wire, stuff like that, right? And so that's essentially, we did this in a bunch of different markets in Latin and Africa, both to China, they mentioned a lot, but actually to the US as well, right? So if you're that business in Brazil, you need to pay Google, you need to pay AWS, you need to pay whatever it is, right? It's the same problem essentially, right? And so we kind of solved that for them. That's why we grew so much. Like we went, into like hundreds of millions of dollars a month, within a year, like processed billions of dollars. And so that was our last year. This year, I think what's interesting, not just about us, but general about the industry, I think, because I don't think we're kind of the only ones going through this process. It's sort of a maturation process that happened to us and to our clients this year. And so this year, I mean, we're still doing that, right? But now we're working, as I said, with banks, with large multinational corporates. It's no longer, right? It's no longer just a like small importer in Brazil, right? Now it's the size of client, the maturity of the client has kind of grown tremendously. And I can't name them just yet. It's like, give me a few weeks. Give me a couple of weeks or a couple of months and I'll be able to name like names that anyone in the audience will recognize that are using stablecoins, working with us, whether those they may be banks or again, corporates or fintechs or PSPs. I think so that's the story, at least in my mind. And I think it does, it has a significance on the industry overall. The story of last year was just explosive growth. The story of this year, now we're kind of a lot more mature, a lot more legitimate, if you will, right? So like, again, we're within the Genius Act working with much larger players and it becomes a lot more mainstream.
Great. As you mentioned, as we near the end of the year, what are your targets, personal and professional, for 2026?
It's a good question. Especially, I don't get asked about personal targets. So this
it can be personal within business, like as a leader, as a CEO, or whatever. Yeah.
Yeah. I think honestly, within the business, I think I've been really, really quite involved, very deep in the business, as is normal with startups. Again, we raised our Series A and we're going through this process of maturation. I need to build my executive team. So I'm not as deeply involved in all the details that's going on in every aspect of the business. And so selfishly, hopefully by late December, it'll allow me to take some time off for like a week or something at the end of the year.
Well earned, I'm sure. Yeah.
Yeah. So I think that's my personal. And then in terms of the business, I mean, obviously, again, there's volume and revenue goals and all that for sure. But I think what's even more important probably is, well, essentially kind of, close a number of these like very large sort of deals and partnerships that I was referring to earlier, finalize that so that next year we can really come out and say, some of the largest public companies or, some of the kind of, best US banks are working with us. Those are difficult processes. And I mean, like, it's very different,
and long.
Yeah, exactly. That's what I mean. Like, these are much, much longer cycles, right? Now we're talking about months of integration work, months of kind of, alignment in terms of like, compliance and things like that. And so these are all kind of coming to an end now or, coming to fruition now. And so I think getting them across the finish line is the biggest priority for the business. This year.
Kirill, thanks for joining us on Tearsheet Podcast, and good luck getting all those deals across the finish line and into next year as well.
Yep, perfect. Thank you, Doc. Thank you.